So we continue. We were picking the items, interest on loan. I saw it was followed by dividends and motor vehicles. So I come here and say dividends. It is followed by motor vehicles. And there is something we know so well from our general accounting, that when we have motor vehicles, they will be followed by accumulated depreciation. Yeah, we will have the accumulated depreciation there. We'll have the accumulated depreciation. Yeah. So we're just trying to set up the framework. So from this bank account, to capture the payables, distribution, administration, other operating, interest on loan, dividends, and motor vehicles. Let's go to the next account. We see whether there is anything not yet captured. To Kianza debit side, you can see payables, or sorry, receivables are captured. Share capital is already captured. Trade payables, administration, cash, other operating, balances. Those ones are already captured. When we come to receivables, we have sales. Sales have not been captured. So let's, and who else has not been captured in this account? No, no one else. So we come down here and capture sales. Haya, then sasa hiyo ilikuwa kwa the receivables, tumefagia kila kitu hapo. Tukikuja kwa payables, cash at hand, cash at bank, the balance, purchases, ndio hatujachukua. So we come and do purchases. Come and do purchases. Haya, then so tumemalizana na hizo accounts. What else now do we need? Tukikuja kwa hii statement, rather hii table here, we already have taken care of all this. They are all captured somewhere. Then let's go to the additional information we see. Now we are told that the owners introduced additional capital, so that will affect the capital and the share premium, which we already have captured. Then we are told that RAD is to be valued upwards. So that tells you that we will have a revaluation reserve, or we'll have some revaluation. And although we already have a RAD account here, we do not have the revaluation. So we can come and put it here. RAD revaluation. RAD revaluation reserve. RAD revaluation reserve. So that has been affected by this one here. The following amounts have been agreed for depreciation. So these are depreciations for the year. We have the buildings, the motor vehicles, and the furniture. Now, as you can see, what we captured for each of the items were the accumulated. We did not capture the current. So we will have to come here and talk of the current depreciation, or depreciation for the year. Depreciation. So this current depreciation, wamepanga raini namna gani? Chanichukue tu buildings, vehicles, and furniture. So we have buildings. No, I do not want buildings at cost. Just wanted buildings. Then vehicles. Then furniture. And equipment. Yeah. So those are the amounts that have been given. The next thing that we need to see is these adjustments. The following adjustments are necessary. We are told accrued administration expenses. So what we have is an account for the administration expenses. We already have it here. but we do not have the accrued. So we have to put it here, accrued administration. Administration expenses. Accrued administration expenses. Then prepaid operating expenses. Prepaid other operating expenses. Then we have who else? We have the income tax expense. Income tax expense. And put it there. Wanaweza goja huko mwisho. Either way. We have the credit loss expense. Credit loss expense. Then we have what else? We have the expected credit loss. The expected credit loss. Expected credit loss. Expected credit loss. And this expected credit loss, it is usually, because the provision, there is the one that will go to income statement. And there is another one, because the ability to reduce the credit loss. It is going to go to statements of financial position. It's going to go to the statement of financial position. What else do we have? Now, this income tax. It was not mentioned anywhere. It was not mentioned anywhere in our figures up here. So when they come to mention it here, it has not been paid. So we should have captured it here as a liability. Let's insert. So income tax. Liability. Should have captured. Can either insert ama wiweke tu huku chini. Although in FA, they are very keen on the format. The next thing is what else have they mentioned? So they have not mentioned anything else there. But we know that we have the closing stock. You see this closing stock here. This stock, this one. There is this amount here. So we will have to bring the closing stock or closing inventory. And this closing inventory, there is the one that goes to income statement. And then we have the closing inventory that will go to statement of financial position. That will go to statement of financial position. So with that now we can just get the retained profit. The retained profit for the year. And this one will be our balancing figure. Then finally, we will have the total. So I think we have done the framework. We have done the framework. I can seek to expand this one here. Don't want to select everything. I just want to expand kidogo up to that point. Okay. So this one, I can make it bold. And then I can come here and I say it will be top double. Yeah, that's where our account itakuja kuishia. So let's start now again with the, are we together up to that point? Someone to tell me yes. Nisikuwe niko peke yangu. Okay, okay. Yeah, I can see the yeses. That's good. So we have read the framework. Let's now start the postings or the recordings. We can actually even now do the, tunaweza malizana na hii toto sasa hapa. Tuseme this is equal to the sum of these cells. Tuanzie hapa, tuchukue hizi zote, teremke. My mouse is disturbing. So it is equal to the sum. Okay. So I want to pick from here all the way. Close the brackets, enter. Shift, close the brackets, enter. Kwani haikuchukua? Haya. Then inisubua namna hiyo because I'm not able to see there. Auto sum. Good. Then I come here, I do the same. This one could be all the way up to, hey, my mouse chakusubua. Haya. Let me see whether these will sort me out. So I want to pick from here, niteremuke mpaka hapa. Let me try the last one. Kisubua, tutaenda to record. In case we know.
Mwalimu?
Yes.
Try and drag the formula to those others.
I copy the formula here.
Yes, actually, yes. it will automatically.
It will be easy, eh? Okay. Just there. Yeah, I don't want to drag to the, yeah. The others, because there will be some balancing figure somewhere. So I think that is good enough for that. Good. So let's now go to the aid draft trial balance. Aid draft trial balance. So we do the same thing that we did with the opening. So tuende kwa bank count, it has this balance. So it is a credit balance. It's a credit balance. So we come here to the bank account on this side, and we must be very careful. We ensure that we are recording on the correct column. Otherwise, we may find ourselves doing a lot of double work. Okay. We go to the cash at hand. The account, this one has a debit balance. So it will be equals to the debit balance cash at hand. Is this one? Yeah. Is it appearing as negative? No, mine is appearing like negative. Okay. Okay. The next one is what the next one is trade receivables. Let's go to trade receivables. Trade receivables, they have a debit balance. So we come here and say equals the trade receivables, this one. You enter. The trade payables, that must be a credit balance. That must be a credit balance. So we go to the trade payables, this one. We press enter. Then we go to RAD valuation. So for the RAD, the opening balance, that must be a debit balance. So we just have this value here. Sorry. Don't want bold. Then for the buildings at costs is also, it has not been affected by anything else. So we just take this value here and then we enter. Then for the accumulated depreciation, the same, it's not affected. This one, we enter. Then we have furniture that must be a debit balance equals furniture, you enter. Then now we have the accumulated depreciation that has not been affected, credit balance equals, we come here, we enter. Then inventory, that's a balance, debit balance equals, we come here, we pick this one, we enter. Then share premium, there is something we are told about the share premium. It's supposed to be 100 here, but we have been told there is something that happened. Let me look for that information. This one, they introduced some cash. Out of which 850 was agreed as a share premium. 850 was agreed as a share premium. So that is going to affect our share capital here, so that now we close with 105. So we can either put it as a working somewhere, or we can just enter straight. Uh, 105, yeah, that way. The same thing with the premium. Premium is no, sorry, this is 105, 105,000 that way. Then for the share premium, it will be 3850. It will be 3850. 3850. And these two, we can put and remove the comma there, put the decimal, remove. Yeah. So the next item is this profit here. This one has not changed, so we just copy this one. My font. The next one is the own stock. That has not changed. We just pick this one. We just pick that one. So let's now go to the distribution expense. Distribution expense, this is captured here. So it is supposed to be a debit balance. We bring it here, equals. We come and pick it there. You press enter. Then we go to the administration expense. The administration expense is also a debit balance, but is appearing on two ends. You see, we have this one here. Plus, there is this one here. So we are supposed to capture them that way. Other operating expenses, they are also debit balances. So we come to this account, we pick this one. Then we add this one and we enter. We enter. Then there is the interest on loan paid. Interest on loan paid should be equal to interest on loan paid. Yeah, this one. So we capture, and it's not appearing anywhere else. So we just press enter. Then there is dividends paid equals, that's also an expense. Dividends paid. There is this amount, it's not appearing anywhere else. So we enter that. After that, there is the motor vehicles. The motor vehicles, we are given the cost. This one. So you enter. Enter that. So then from there, we have sales. Sales is supposed to be here. Is no, the accumulated depreciation for the motor vehicles, which you have not computed so far. So hiyo tunaacha kwanza. Then we come to the sales. Sales, we captured them from where? From this account here. So you enter. Then purchases supposed to be equals to, there is here, you enter. I think those are the items that we were supposed to have gotten there. Now, this one does not have any balancing figure, so we can as well copy these two formulas. Here, we can autofill. Good. And when we do so, you can see it is balancing. So I think I need to pick these values all the way up to there. I make them 20. I make them times. Good. So we are good at that point. So that one is completed. Let's now go to the adjustments. We see what happens with the adjustments. So let's look at the additional information. This one, we already have adjusted for it. We already have adjusted this by having it come to the share capital here. So that one is already adjusted. The next one is RAD. RAD is to be valued upwards. So what we are going to do, we will debit RAD and credit the revaluation. So let's go to where there is RAD. Let's go to where there is RAD here. Now in the column of the adjustments, we will put 10,000. We will put 10,000. We'll put 10,000. Then we go and credit the revaluation. RAD revaluation reserve, this one. Let me see, this is where, this is column F. So we come and credit the 10,000. RAD revaluation. And I want us to go marking as we complete those transactions so that it will make our work easier. Now this revaluation will go to the statement of financial position. You understand? We'll go to the statement of financial position. Let me see the credit side. The credit is K. So this one, I want it to come here. Equals this. Yeah. So we mark that one has been brought there so that we don't forget. Higher. Then it is also going to affect our RAD here. Our RAD will go to the debit here. And now it will be equal to this amount that we had here at the beginning plus the revaluation that we have done. Yeah. So that one is done. Okay. The next information that we are given, is the following amounts have been agreed for depreciation. So there is depreciation for buildings, 5,000. Yeah, that one we can pick it. So this depreciation for building, we are going to debit the expense and credit the accumulated. We debit the expense. So the depreciation, where are the current depreciation? The current depreciation, they are here. So for the building, when we come to this column of the adjustments, that is column F, we will, be very careful. We will need to debit that because it's an expense. We are debiting because of this. So you enter, and then we credit the accumulated depreciation for the building, this one. So it must be this column here. This one equals to this amount here. And then we can complete that transaction. We can complete that transaction whereby we know it is going to come to the credit here. It's going to come to the credit. So we say equals this one plus this one. Yeah, so that one is now complete. And then we also know very well, that this 5,000 here, this 5,000 will go to the income statement as an expense. Will go to the income statement as an expense. So I need to know my income statement. It is, sorry, I had interchanged here. This should be the debit. And then this one should be credit. So credit. So this one is on I, so H. So I need this expense to go to H, this one here. So equals this. Yeah, good. So we are through with that item for the depreciation. Let's do the same with the other one. Motor vehicles, we are given 14,600. 14,600. So we will come to where we have the amount for the motor vehicles. Here we debit, so we say equals 14,600. And I can just bring it here straight to the income statement. Nimalizane nayo hapo. Then I go to the motor vehicles, the accumulated depreciation here. The accumulated depreciation, sorry. The accumulated depreciation for the motor vehicles, I credit that. Where did we put it? Accumulated depreciation. Yeah, I'll put it here. Equals this amount. Yeah, the accumulated depreciation. And when we put it there, it is going to appear in our, it is going to appear here. I hope we are getting it right on the credit. So it's here. It's going to appear here, these amounts. We did not have a prior amount for the accumulated depreciation. So that will take that care. Higher. The next one is this one, furniture. We do the same thing. So we'll come here. I think I'll have to remove this one. I'm able to see down here. Haya, so tuko nao hapa kwa furniture. So should be equal to this amount. So you press enter. Then we are supposed to debit it here in our income statement. And then we take this amount to the accumulated depreciation for the furniture. Dio hii line hapa. We come and credit here. Equals this amount. And then tuende nayo hapa kwa credit statement of financial position, tuseme equals this amount plus this one. Yeah, so that one is already catered for. That's catered for. Haya, tunaendelea. The next adjustment, we have now the accruals. The accruals. This is an expense that was incurred, but we never paid. So the impact is that we shall increase the administration expense and increase our liability. So we will come here, look for the administration expense. Administration expense. Where is it? Administration. I've seen the accrued administration expense first. Let me see which column in the adjustment. Credit is on G. So I'm supposed to come here and talk of that's the accrued expense. Is that so? The credit side. So this amount. That way. Then I go to the administration expenses here. We debit them. So should be equal to. We debit there. Okay. And then how will it impact? How will that impact on our administration expenses? They will come here. They will come to the income statement. They will come to the income statement here as an expense. So we will say equals this amount here plus this one that we have added. We press enter. So that one comes in there. Then this 650, this one here, it will go to the balance sheet here as a liability. As a liability, this one. As a liability. So that is also completed.